crypto lending platform Moon Mortgage raised $3.5 million in a seed round. The platform will allow investors to use their crypto as collateral for financing real estate investments. So joining us now to discuss it is Aaron Nevin. He's the founder and CEO of Moon Mortgage. Hello, Aaron. How are you?
Hey, I'm doing pretty well. No complaints. How are you holding up?
We're holding up all right, but the real estate market is kind of getting interesting. It's getting funky. We definitely want to talk to you about that in a second. But first off, if you can explain how Moon Mortgage works, because look, as somebody who's been in real estate since I was walking, the one thing we know is that what constitutes a mortgage is that you're using the property itself that you're buying is the collateral. In this case, though, you're using digital assets as collateral. So is it really a mortgage? Where do you guys stand in terms of where are you in the pecking order here, if you will? Should there be a foreclosure?
Got it. Fair question. So we're definitely a mortgage. We're regulated by the traditional regulatory bodies for the mortgage industry, CFPB. What we have really done that is innovative is replace the down payment process and use crypto collateral as a mechanism for insuring the mortgage. So just like a conventional mortgage where you would put down 20% or up to 30% for an investment property, we do something similar, though we don't require a deposit directly. We take that crypto asset and use that as essentially the equivalent of a down payment. And then we're able to provide 100% financing for the purchase of that property. From there, we have a first position lien on the real estate, as well as custody of the crypto assets. And after that, it's serviced like a conventional mortgage. These mortgages in the early days are really geared towards the higher net worth individual, those who have a lot of crypto assets, but they're sitting in cold storage, more or less collecting dust. What we give or what we provide is really a way for them to leverage those crypto assets to get into either an owner-occupied residence or a cash-flowing investment property. We like to say we're bringing a little bit more utility to assets like Bitcoin and Ethereum.
So walk me through a little bit of this, because when I put down the 20% cash, the 20% usually goes to the owner that I'm buying the property from, and you supply the mortgage the mortgage company or the lender supplies the remaining 80% in a commercial transaction, and it could be a lot less in a residential, depending on if you're using, let's say, Fannie, Freddie, whatever agency you're doing. In this case, though, you're taking in the crypto, or is that crypto going to the seller? First of all, second of all, when you take in the crypto, do you convert it to cash, or do you hold the crypto and take the risk entirely? What exactly happens there?
Yeah. So when we eventually move to close all the property, we provide 100% financing to the seller. We take the crypto into custody. We do have to impose a liquidation.
What percentage?
Sorry.
What percent? What do you usual? What's usual LTV like?
We're starting with 100%.
Right, but if
make this
you're taking 20.
So if I'm buying through the whole flow.
Yeah.
So if you're buying $1 million property, you post $1 million worth of Bitcoin or Ethereum. We provide 100% financing for the purchase price of the property. We then impose a liquidation level to account for any volatility. There's plenty of opportunity to top off your capital, though, to avoid a liquidation. And we do this because none of this debt sits on our books. We ultimately turn around and sell it to the secondary market. And so it's important for us to be able to say to the secondary market that there's a guaranteed equivalent of a down payment in this asset. And
just
then,
one-to-one.
It's one-to-one to start. Again, targeting higher net worth individuals. But as the acceptance for this product becomes more widestream, we'll begin to introduce more hybridized products, a blend of cash, a blend of crypto, and everything in between.
So I do not have Lawrence's expertise in real estate, so I'm going to ask you to sort of break this down more simply. My understanding is that mortgages, real estate, it's kind of complicated enough. And in the past, whenever sort of more exotic financial instruments were added to mortgages, it didn't end that well. So could you just explain quite simply, like, why is crypto even involved in this? Like, what is the value add here?
Yeah, absolutely. So what we really are is an asset-backed lender. There are many individuals in the crypto space who don't meet the conventional requirements to qualify for a Fannie Mae friendly loan. Maybe they don't have a W-2, they're probably entrepreneurs and have 1099 based income, or they're sitting on a bulk of assets. That basically means you're not going to qualify for any conventional mortgage. It's really difficult, honestly, to find anyone who will lend to you for the purpose of investing in, especially an owner-occupied property, but an investment property as well. So our approach is to not underwrite the property independently. We really focus on the individual. What does their personal financial situation look like? What are they able to provide an income? Fannie Mae has very strict guidelines excluding any income or crypto-based assets on a balance sheet. We look at all of that. So maybe you have successfully been a crypto trader for 10 years, 2 years, and you can show us statements proving that. Maybe you are a Bitcoin whale and never felt the need to have a job after that. We consider all of those variables and the other assets you have. We'll look at social security, credit scores, all of the traditional underwriting criteria as well. But end of the day, we're an asset-backed lender. So, if you feel comfortable with your Sorry, yeah.
Yeah, if you're a crypto bro and the banks won't give you a look, at least you will. So I also want to ask you about, kudos to you for raising seed money during a bear market. We just reported about how crypto startup funding is plunging to its lowest level in more than a year, according to PitchBook data. So I guess, how did you raise this money? And is this initial $3.5 million, what is it going to be used for?
Yeah, so it's never easy to raise money, but we're solving an acute pain point for everyone we raised money from. There's still a large group of individuals in the crypto space who have enough capital to desire this type of a loan. So for us, the fundraising process was really just digging into the market itself, having more conversations than I can count with potential borrowers who were looking for this type of product exactly. And that's really what's led us in this direction. I personally struggled with this problem. My co-founder, Tristan Marino, struggled with this problem as well. So it was relatively open arms. Yes, we're in a bear market, but general belief among these long-term holders is that the market will return in a couple of years, and when that happens, we'll certainly be ready.
Mm-hmm. Is it only in the United States, or I know several people in Europe and other countries, continents around the world that would like something like this?
For now, we're US-based, but we definitely have plans to expand to the UK and Europe soon. We can actually work with those buyers, though, if they want to purchase something in the States.